If you feel like you're overpaying in taxes, you probably are. And that's not a vibe, that's simple math. Let me explain how this actually works. Most people do the same thing every year. They go to work, they earn a paycheck. Before they even see the money, they already told the system how much tax to withhold. Federal income tax, payroll tax, state income tax, if your state has one. It's automatic, it's mechanical, and for most people, it never changes. You work, you get paid, taxes get withheld, then April rolls around. And when tax time comes around, only one of three things happen. You either write a check because you under withheld, you break even, which there's no refund or payment, or you will get a refund. And here's the part that most people don't understand. All three scenarios usually mean you overpaid in taxes. Yes, even if you got a refund. Yes, even if you break even, because none of those outcomes have anything to do with tax strategies. They only tell you whether your withholding estimates were close. That's it. A refund is not a tax win. It's just proof that the government held your money longer than necessary. Breaking even isn't optimal either. It just means that you guessed correctly. And writing a check, that usually is a sign that planning never happened at all. The reason why this keeps happening is simple. Most people are not doing real tax planning. They're doing tax preparation. Huge difference. Tax prep is backwards looking. It records what had already happened. Tax planning is forward looking. It changes what happens before the tax is even calculated. Most people never cross that line. Now, some people do some things. They contribute to a 401k, they grab the employer's match, they might have an HSA or FSA, and maybe a child care credit. And don't get me wrong, those are fine. But let's be honest about what they actually do. They shave a little off the top. They don't change the structure. Once you earn above a certain level of income, those moves have very minimal impact. They don't scale, they don't compound, and they don't fundamentally change your tax outcome. So what happens? Your income grows, your tax bill grows faster, and every year feels heavier than the last. That's when people say things like, I make more money, but I don't feel richer. My CPA never told me that. I thought my taxes were fine. And technically, your return might be correct, but correctness is not the goal. Optimization is the goal. Here's the truth most people never hear. The tax code is not neutral. It rewards certain behaviors and punishes others. Employees are taxed first, business owners are taxed last. W-2 income is the most exposed income in the system. There's very little flexibility once your check hits your bank account. And if your entire financial life runs through payroll, you're playing defense every single year. Tax planning isn't about loophole. It's about positioning. How your income is earned, how it flows, how it's classified, and when it's recognized. And no, you don't need to be a millionaire. You don't need to be doing anything sketchy. You don't need some exotic strategy you saw on TikTok. You just need to have intent. Most people do not plan taxes, they react to them. And the system is designed to punish that. So if you ever looked at your return and thought, is this really the best that I could do? That question alone tells me the answer is no. Because once you understand how the system actually works, you stop asking for refunds and start asking better questions. And before you go, if you want to learn more about your tax situation and find help on what you could do to be more tax efficient, click on the link in the description below. I'm going to provide a spreadsheet that helps identify certain tax strategies that are applicable to you as an employee, a W-2 earner, and from there you can have a ground foundation to build from.